Hey everybody, I'm Rob Freeman and welcome back to Insuring the Built Environment. Today we're answering the question, what is DSU or delay in startup coverage? Well, DSU coverage, or also called delay in completion coverage, is a type of coverage that you might find in a builder's risk or a construction all risk policy. And builder's risk and construction all risk policies are types of property insurance that you can buy for projects while they're under construction. And they specifically cover projects while they're under construction, and they cover physical damage to the property while it is being built. Now, what DSU coverage does is it provides a level of insurance policy coverage beyond just the physical damage. So it acts almost like a business income or business interruption coverage for that project while it is under construction. Now let's look at an example. Let's say you're building a large energy project, such as a ground mount utility scale solar project or a wind farm, and you have you've borrowed money to build that project. You're paying debt service on the project. You have interest in operating expenses, amortization costs, other things like that that are tied to that loan. And you also have just ongoing operational fixed costs that you are associated with the project. And you have a specific date when that project's supposed to be complete based on what the EPC is doing. And what builder's risk does is it covers the project in case something gets physically damaged while that project's under construction. And then what DSU does is if the project is delayed beyond the scheduled completion date and you're not generating income, you're incurring additional incremental costs on that project while it's still not complete and you're waiting for it to be complete, then the DSU policy will pay for those soft costs on a net basis based on the covered soft costs that you're incurring. And so that's really what a DSU policy does. It's like a business income coverage for a project while it's under construction. And DSU coverage will use a time element deductible. So whereas you might have a financial deductible on, say, a regular property policy, on a DSU policy, because we're talking about a delay in startup that's costing you money, then you might have, say, a 1 month time element deductible. Now, if you have a delay in startup that is 2 weeks and you have a 1 month deductible, it doesn't make sense to file a policy claim in that situation. But if you have a 6 month delay with a 1 month deductible, then that does make sense to file a claim for DSU policy in that situation. And again, what the DSU is designed to do is cover the covered perils that would cause that project to be delayed. And there are all different types of reasons that a project could be delayed, and some of those may be covered perils and some may not be covered. But at the end of the day, if you have a project that's delayed for multiple reasons, you'll be able to file a claim along with whatever the covered perils are that are causing that delay beyond your deductible. And so it's a very valuable type of property insurance for high value projects that are expected to generate income and have real expenses while they're being built if the project is delayed for some reason. So that's kind of it in a nutshell. DSU coverage is a type of coverage you'll find in a builder's risk policy or a construction all risk policy that expands the coverage beyond just the property damage to like a business income or business interruption for soft costs that you have to incur as a result of that project being delayed past the trigger date or the start date of that project when it's going to be operational. So if you have questions about a DSU policy and you want to reach out, please feel free to schedule an appointment with me at the link below this video. Thanks again for watching, and hope this is helpful, and happy holidays.